Good morning and welcome to the Friday edition of Three Things I'm Looking At in Markets today. Obviously a huge night last night with Mario Draghi's disappointment, European stock markets getting hammered, DAX losing 400 points. That then knocked the US stock market lower with reaffirmation from Janet Yellen as well that the Fed is tightening. US markets did relatively well, but the reality is that Draghi got smashed last night. 5 people dissented. Jens Wiedemann, who's head of the Bundesbank, went straight to Bild and said that the measures that they took last night were unnecessary. Draghi, a good chairman, must be able to carry his board. Draghi clearly no longer has the confidence of his board. Certainly the 5 dissenters are not going to be happy, and it's pretty clear that he won't be able to make the promises he's made. The ECB is done unless or until the European economy falls in a hole again and a consensus builds for more easing. But for the moment, nothing more from the ECB above and beyond what they've done. People who think that he's holding something in reserve, I think, are mad. He's been beaten. Just last week, Reuters floated a story about all these extra things they might do. They didn't really do much at all. So very disappointing. That drove the euro higher. That US dollar weakness has helped other currencies as well. And so we're left today with a very different investment landscape. ECB isn't going to provide more shock and awe. Fed's starting to look at interest rate rises. And crucially, and tonight's the big night, crucially, the Saudis might actually be able to engineer a floor for crude oil to then trade up and through. Why is that important? That's important for inflation. Crude oil has been part of the depression crude oil has been part of why inflation has remained so depressed. It's also about aggregate demand, as I always talk about. But if the Saudis can put a floor under oil at $40 and then start to drive it up to that $60 to $80 region where they want it, then you get the unwind of the dampening of inflation and you start to get inflation tick up. That's important for the ECB. That's important for the path of the Fed. And I wrote a great piece from State Street Global Advisors the other day where they said that they think the Fed's going to tighten in December and then 4 times next year. That's not priced in the market. Certainly not priced in the US dollar, which means that you probably want to be looking to sell rallies here somewhere. And also it's not priced into bond markets, although there was bond market carnage last night. German 10 sold off 20 points, 41.6% they lost. Imagine if you woke up this morning and the ASX was down that much, or the FTSE, or the DAX, or the Nikkei, or Shanghai. There'd be all the headlines, but it's hard to get to mention. Even US rates, which climbed 15 points, are up 6.55%, something like that, 6 or 7% anyway. So last night and then tonight with OPEC, these could be 2 really important, crucial turning points for the outlook for markets for 2016. So it's very interesting. Anyway, let's have a look at 3 quick charts that I'm interested in today. And we'll kick off with Euro. Euro has, I don't actually know how to make this any bigger, otherwise I would. Maybe that one. There we go. I'm learning to drive. And this is hopeful. I'm using the photo part of my fantastic Windows 10 operating system because it seems to be less intensive. Now, what we've got here is we've got the Euro. You can see that I was long, as you know. Been long for a while, uncomfortably so it looks fabulous. Earlier this morning, I took 50% of that position off, mainly because it's overcooked on multiple time frames, whether it's your 4 hours or your dailies. This is a massive bar. This is the probably close to the biggest range of the year. You'd hope so, wouldn't you? 400 odd points from high to low. So how's that look? It's outside the Bollinger Bands. You know what I say when things are outside the Bollinger Bands. They are going to pull back a little bit. So I'd be expecting Euro to pull back a little bit. But structurally, I'm expecting it to go to 110.5, 111.5, something like that. And then we'll see. It could rise all the way back to 115, depending on how dovish the Fed is when it hikes rates in a week or 2. Key there, of course, is we've got probably 10 trading days, 9 or 10 trading days. So plenty could happen. So keep your wits about you and keep trading that up down. Right, so the next one. Oh, there we go. Right, so the next one I want to talk about is the impact on the S&P. And of course, Yes, this is the nice little trend line I've drawn in the S&P. I expected it to get back to 2050. I think we spoke about that yesterday. It did that, got down and through, has broken. We had that engulfing candle. Remember, we talked about that yesterday, that bearish engulfing candle, and then we've had this big down move today. From my point of view, non-farm payrolls tonight is obviously critical for US stocks. It could be that OPEC helps US stocks to a certain extent because it's going to help the energy industry if they do come to a deal tonight. Don't forget, non-OPEC members have got to be part of that deal. But for me, the key is this trend line. I think it's going to head lower, but we'll wait and see. Certainly something to trade off. Got a nice little flat double top there. I'm targeting a move under 20,000. 2,000. I'm thinking about the Nikkei there for a minute. You can trade the Nikkei at Axie Trader, by the way. We've introduced a Nikkei CFD this week. I love the Nikkei. It's a great trade. If we have a look at oil now, and I'll blow that one up. A lot of chatter in Asia yesterday about what the Saudis might not do. I think they are going to come to the table with a deal. Whether they can get it up and whether they can get non-OPEC members to join in is another matter. But we'll wait and see. So what have we seen here? We've seen here that last night's price action, yesterday's price action is inside the range of the previous day. So that clearly that this is we've got a floor here around the 95 kind. We are, if OPEC can come for a deal, we're up at 44.5 pretty quickly, I think. And then above that, you're looking, back toward 49.90. I think if OPEC can come to a deal, we're going to have another crack at the 200-day moving average. So we'll wait and see. If not, if it breaks down and through this this low, give it give it 50 cents below that. So you'd call it, say, 39.25, something like that. Then it's probably going to go for a run into the 37s and head back towards this low here. If it got to that low, then you'd think that things are looking pretty dire for the oil market. So they're the three things I'm looking at today. Non-farm payroll tonight, retail important. That's a more up-to-date view on what consumers are doing. I'm actually not looking for a very NAB retail sales survey, which I think is a pretty good lead, went backwards last month or in October, which is kind of weird, but we'll see. 11:30 today, watch that for retail sales. That could put some downward pressure on the Aussie, which is up into that resistance zone in that it's about 73.60 this morning, 73.53, and so 73.80, 74 is resistance for the Aussie. Obviously, the ASX going to open in a bad shape this morning. It's down 68 points, but a lot of, it's being driven by offshore at the moment. So that's it from me. OPEC, non-sales, and watch the euro price action. It's going to be interesting to see how it goes. Charts still work in markets like these. You've just got to change your time frames, have a look, keep your position scaled to the risk and the volatility and that kind of stuff. That's the way I do it anyway. So that's it from me today. Have a great day. You can find me on Twitter at Gregory McKenna. You can find me at Business Insider. You can find me at Axie Trader, and of course on my own blog, gregmckenna.com.au. Any feedback, thoughts, always welcome. Have a great day. Have a great weekend. Bye for now.